What's up, y'all? So in today's new video, we're going to be talking about my top 3 stocks on my watch list. These are the stocks I'm looking at. Most of these stocks were up over 5% today. So the first stock we're going to be talking about is Carvana. Carvana was up 11% today, up to $21. I believe it opened up around at $18. If you look at the 3-month chart, the stock was only at $6. This is around 3 months ago. But now you look at the stock, it started rising a little bit, in May, and then now it's all the way up to $24. So Carvana's been going crazy within the last week. Look at this week chart. It's already up 30% in the last week. So even if you wasn't there 3 months ago, just this past week could have been making a lot of money. 1 month is up over 100%, which is actually crazy. And again, 3 months, it is up 200%. So according to the news right here, Monday's moves follows a turbulent week last week, which featured a major announcement from the company that it expected to reach adjusted EBITDA of more than $50 million in the second quarter of 2023. The announcement fueled the rally that drove the stock price up to $25 last Thursday. Then, like I said, it had a little pullback, and then you seen the stock go to around $19, $18. And then Carousel Capital released a short report on Monday. So the short report, basically they're talking about why the stock should be going down. They said, but the stock continued to climb despite the bearish report by that fund. So this was, again, driven by the positive analyst coverage. Like they said, more than $50 million in the second quarter of 2023. Again, Carousel takes short position in Carvana and shares of used car retailer. The investment management firm said on Monday, adding the company will never generate sustainable positive cash flow until its debt is equalized. Well, this, they're not lying. Something to think about and keep in your back pocket. Liquidity will drain further, and Carvana will be starting at over $250 million interest payments in the fourth quarter. Its seasonally slowest period. So we'll see how this goes. But as of right now, Carvana is up over 100% in the last month. With all of that being said, now my second stock that we're going to be looking at is Carnival Cruise Line, CCL. Just today, Carnival Cruise Line was up 12%. There was a good reporting on this. If you look at it, though, in the last 5 years, Carvana is down 25%. But now, recently, in 2022, the stock was only at $6, $7. Kind of the same situation as Carvana. In the last year, though, the stock is up 41%. As I said, the stock was at $8 at one point. In the last 3 months, the stock is up 57%. And in the last month, the stock is up 40%. So just in 1 week, too, look at that, 19%. So some of these you could have gotten the last 2-3 weeks. If you've been investing, you've been probably making a good amount of money in this market. So shares of Carnival Cruise Line towards a 13-month high Monday after 2 Wall Street analysts turned bullish, saying growing demand is no longer just about a post-pandemic recovery. BOFA securities analyst Andrew raised his rating on Carnival stock to buy after being a neutral since June 2020, while JP Morgan's Matthew Boss raised his rating to overweight after being in the neutral camp for at least 3 years. So because of this news, the stock rose 12%, and you saw a few other cruise line stocks like Norwegian run today too. So JP Morgan's boss said his key takeaway from a recent meeting with Carnival Chief Executive Office John Weinstein was that the company was no longer riding the coattails of a post-pause update as demand from different customer types has returned to pre-pandemic balances, with new to cruise demand inflecting this year. A key point from our meeting, millennials generally lead the initial post-pandemic recovery across all travel sectors, including within the cruise space. Boss wrote in a note to clients. Importantly, in explaining the continued demand strength, management team citing a recent inflection in new to cruise, pointing to sustainability versus pent-up demand from loyalists seen a year ago, with new to cruise customers back to normalized pre-pandemic levels. So with that being said, we've seen Royal Caribbean up 2%, Norwegian up 7%. So there's been a lot of runs, and we'll see how long this run will do for these cruise line stocks. Now, the last one that we're going to be talking about is Shopify. Shopify was up about 5% today. Being with that, look at the last year. In the last year, the stock is up 96% to 65 now. There hasn't been much news on this stock or anything like that, but the stock has been running. I like Shopify because of all the stuff with the AI going on. There's probably going to be a lot of people creating companies or creating businesses. I think drop shipping is getting a little bit more popular now. So I think Shopify is going to be on a good tier for a little minute. They had a great run in the last few years before all that, the little, turn down in the market in the last year. But when the pandemic happened, Shopify was one of those stocks that was up like thousands of percent. So we'll see if Shopify could get back to where it was at before. But those are my top 3 stocks that I'm looking at, and that's on my watch list for this week. So let me know if y'all got these stocks on y'all watch list and what y'all think. But like, comment, subscribe. We'll be having more videos soon.